Company being analyzed today is Safe Enterprises Retail Fixtures. This is a company which recently had its IPO. This company had its IPO from June 20th to June 2024. Sorry, June 24th, 2025. So recently had its IPO. This is a recently listed company and currently has a market cap of 939 crores. Current price of one share is 201 rupees. We don't have the book value. We have a return on equity figure of 77.6%, return on capital employed percentage of 96.4%, return on capital employed, and the price to earnings ratio of 24. So this new listed company, what we're going to do is we're going to take a look at its earnings, whatever information we can get it, balance sheet, what this company actually does, who are its clients, its manufacturing facilities, and if we can, the future prospects. Now, a lot of information is not present on the company, so we're going to work with what we have. And of course, as always, this is not financial advice. Let's start. So we have the earnings. Wow. Okay. We have the earnings. All right. Uh, 2 years, actually, only 2 years, 2024 and 2025. Okay. At the highest point, we have the sales. We have the sales. Should we do the sales first or should we do the other things second? Okay. So here we have the sales. 2024, 101 crores in sales, and 2025, 138 crores in sales. You see these black figures, these are the operating profits of the company. 32 crores in 2024, 2025, 49 crores. The OPM or the operating profit margin is below that, 36% in 2025, 2024, 31%. Okay, and finally we see the net profit, it's down here, the lowest figure, like these two, this and this. So 39 crores of net profit in 2025 on a revenue of 13 crores. So hold up. Whoa. Okay. 39 crores. 39 crores of net profits on a revenue of 138 crores, giving us around a 30% net profit margin. A 30% net profit margin. All right. So this was the overview. Again, we don't have a lot of information about this company at like all. Again, recently listed. So the other information we do have is this. We have the cash flows of this company for the last 2 years. Last 2 years, okay? And taking a look, just taking a look, it seems that the last 2 years, positive cash flow. 13 crores of cash flow from operations in 2024 and 2025, 31 crores of cash flow from operations. Ignore these two numbers. I guess not relevant to our discussion right now. But cash flow from operating activities is like 31 crores and positive. Both years positive, big growth between the 2 years. So interesting. Now let's take a look at what this company actually does. So what it actually does. So for that, we move to, yes, Safe Enterprises Retail Fixtures Limited, powering India's phygital, all right, phygital retail transformation. Phygital, of course, physical plus retail. So what does this company actually do? Now, here it states that it's a merchandising solutions provider, into designing, manufacturing, supplying, and installing of shop fittings and retail fixtures. What this company does, okay, it designs, manufactures, supplies, and installs shop fittings and retail fixtures. What are these shop fittings and retail fixtures? Now, basically, what this is, and of course, I got Google to explain all this. All right, shop fittings and retail fixtures. So you go to any retail store, right? You may go to a shoe store, an electronics store, or a clothing store, and there to display all the clothing, there will be furniture, right? There will of course be furniture. There will be some kind of furniture on which the clothes are given. There will be mannequins and all that. There will be displays like LED displays of some model wearing the product and advertising that product. So you go in a retail store, and the retail store has equipment, right? Retail store has furniture, and it has design in it. Okay, there's design done in the retail store. So this is retail fixtures. Retail fixtures are any equipment, furniture, or structural elements in a store used to display, organize, and showcase merchandise and to guide customer flow. So basically, we have a store, a retail store, the entire interior designing of the store, where's the furniture going to go, which products are going to be placed where, the shelves, what shelves, the glass shelves, wooden shelves, all of that, the aesthetic of the store, that's what it does. It manufactures, it designs, it supplies all of these things for retail stores. That's what Safe Enterprises does. Okay, fine. Then here it says it serves multiple retail segments such as fashion and apparel, electronics and departmental stores, etc. All right. They have a network and presence over 25 states and union territories. They have distributors. They have distributors in Dubai and Kansas City. Distributors. So it seems that they make money from exports also from like other countries, foreign countries. And here they have given their growth and few important things. Here they say they are a high growth company, sustainable margins, scalable manufacturing capability, virtually debt free. The company is virtually debt free. All right, 265 employees, 80% profit CAGR, annualized growth rate, and revenue CAGR 33%. That is, I believe, that the last year, the last year only. So here we have more info about the company. Again, we don't know a lot about this company. We can take an initial look at this, and when more reports come out, more annual reports and all that comes out, better. 30 years heritage in retail solutions, 3,000 plus standardized shop fitting components. Okay, if you're wondering what shop fittings is, shop fittings are okay. Shop fittings is the business and activity of equipping a retail or service store with all the necessary furniture, fixtures, equipment, including designing the interior layout, installing shelving, counters, displays, and lighting to create an effective and appealing consumer environment. That definition was better than anything I ever said. I should have used this at the beginning of the explanation, not my horrible explanation. Okay, even better. Retail fixtures, shop fittings, okay, furniture, okay, shelves, counters, displays, lighting, all of that inside any retail store. So that's what shop fitting is. Better definition than I could ever come up with. 50 million plus square feet retail fit space converted. So 50 million square feet worth of retail space. It is already converted. This is the plant area. So the total manufacturing facility, I believe, how much it can produce. And 50,000 plus projects have been already implemented. All right. 50,000 projects have already been implemented. Then here we have seen the fiscal year 2025 highlights. 138 crores in revenue, profit after tax of 39 crores, return on equity 77%, and return on capital employed of 69%. Extremely efficient company, it seems like, when talking about profitability and asset use. These metrics are like incredibly good. Then, oh no, not this. Yes. Retail fixtures, the backbone of in store experience. All right. Here, what do they provide? They provide wall mounted fixtures and gondolas, smart checkout counters, backroom cabinets, okay, storage, all right, digital signage, LED displays, and touch panels. So it manufactures, it supplies, it designs all of these things. All right. And retail fixtures, why are they important? Okay, thoughtfully designed fixtures reflects the brand's positioning, the brand's identity. Again, different brands have different, styles and all to display all of that retail fixtures. So, all right, all right. And covering more, we have traditional fixtures. Okay, storage racks, storage systems, cabinets, digital display screens, full glass counters, cash counter, etc. And electronics, fashion, apparel. So three different segments we are seeing. Many different actually segments. It could be used for shopping and fashion stores. This could be for departmental stores. It could be for even electronic stores. So wide variety of uses, which is always good to see. And then they have innovative solutions. Oh, innovative solutions like wall mounted display with hooks and shelves, glass shelving units, counter display units. I guess you can read all of that. You can see these pictures, some of the products. And this is not my screen being blurry. The presentation itself is actually this blurry. Okay. So we all saw this. These are the details. I don't know what they mean. I guess important thing that here it says that it can be used across varied store categories such as footwear, fashion and apparels, gifts and novelties, pharmacies. Okay, so that's the one important thing we can take from here. The two important things is that a variety of products are there, like variety of things, hooks and shelves. They're like literally lines of products, lines full of product names, and different number, a variety of store categories. These products can be implemented at. That's good, big scale. Now let's take a look at its manufacturing capabilities. All right. The company operates from four manufacturing units, three company itself and one is subsidiary. One is located at Sanpada, Maharashtra, Navi Mumbai. Second is located in Navi Mumbai, Maharashtra. Third is located also in Navi Mumbai, Maharashtra. Three units in Navi Mumbai, Maharashtra, and the fourth is also in Maharashtra. Okay. Pune. Nice. Now, the thing to look at here is the production and the installed capacity and capacity utilization. Now, this is from 2024, from 2022, fiscal year 2023 to fiscal year 2025. Two sections. We have metalworks for metalworks, so I guess products made of metal, and for woodworks, products made of wood. Here we can see the installed capacity. Installed capacity, all this is in tons. Installed capacity for metalworks has risen from 11,165 tons to 15,335 tons in 2 years. So the capacity for installed capacity for metalworks is rising. Then for woodworks, below me woodworks, installed capacity has risen from 33 lakhs 63,000 tons to, okay, sorry, in square feet. Woodworks is in square feet. So 33 lakhs 63,000 tons, no, square feet to 39,000, no, 39 lakhs 10,000 square feet. So 33.63 lakh square feet to 39.1 lakh square feet in 2 years. The installed capacity is rising. And if you take a look at the actual production in both cases, you can read them out. It has risen at a faster pace. And the most important, the capacity utilization is increasing in both segments. Okay. Capacity utilization is 90% for metalworks in 2024-2025 and 87% for woodworks. So capacity utilization is increasing. They are using more and more of the capacity, which I believe will lead to a lower average cost of production. Economics, lower average cost of production. So capacity is increasing, capacity seems to be increasing, and production is increasing even faster and utilizing even more. So that's the, I guess, the good thing to be noted. Now, success stories. Okay, there's success stories. Success. Ooh, wow. Zudio. First is Zudio. So they had a project with Zudio in Hyderabad. The project area was 8,000 square feet and the products used was Forte double slotted. All right, I don't know what that means. So I guess we are just going to take a look at the clients. Then we have Metro Shoes. It's like India's highest, most valued shoe brand company. 1,000 square feet store in Hyderabad. Okay, then we have Lotus, 2,000 square feet project in electronics. This is an electronics company. And Vision Express is a health and beauty company. Okay, the project area was 500 square feet. So we can take a look. We have four different figures for square feet, right? For area. Project area ranging from 500 square feet, the lowest, and 8,000 square feet. So they can operate from smaller stores to larger stores and from all categories: health and beauty, electronics, footwear, fashion, fashion stores, all these categories they can operate in. That's the point we can take from these success stories. And they can sell, I guess, different products. You can see in the products used, it's written there are different things, which I don't know what they mean, but yeah, different products being sold. Okay, all right. Now let's take a look at its financials. Hmm. Some financials. We have revenue, we have profits. Okay, revenue from operations in 2023. Revenue seems to be from. It seems to be from standalone, so only company itself. And 2024, 2025, we have the subsidiary included. Okay, so when did they acquire the subsidiary? We don't know. So 138 crores, we already covered them. 100 crores in 2024, 77 crores in 2023. All right. EBITDA of 52 crores in 2025. 2023 was 19 crores, and the EBITDA margin has increased from 24.85% standalone to 37%, 37.67% in 2025. Profit after tax margin has increased from 15% to 22% and finally 28%. Cash flow from operations is also increasing. Big increase, 8.5 crores to 13 crores to 31 crores. Okay, interesting. Return on capital employed, decline, has seen a decline. Maybe they're expanding so much that their asset growth is outpacing their revenue growth. Maybe that's a reason. But still 69% is actually really good. Return on equity is also declining. Okay, this could be this could be this massive drop could be because of the IPO funds. They recently had the IPO, so they got the IPO funds, and that adds to the assets, total number of assets, which are the denominator for both return on equity and return on capital employed formulas. So, and of course, they're expanding the assets. So I guess this is a thing to note, thing to see. But still, 77% really nice. So 69% really nice. Now let's take a look at some of its clientele, the new clients we have. We have Zudio, we already saw this. Metro shoes. Metro. Okay, Mochi. Nice. Mochi is also a shoe brand, I believe from Metro itself. We got American Tourister. We got Yola, Samoth, okay, Skechers, Killer, Mufti. United Colors of Benetton. Is that Mercedes? Yo, they got Mercedes. Okay. At the retail stores of Mercedes. Fine. Even Mercedes. Okay, and some other brands. Who is that? Is that Polo? That's Polo, right? That is US Polo. Yeah, that's Polo. So many different brands, even Mercedes, Hypercity. We got Max Hospital. I don't know. Many different types of clients, prominent, famous clients, also big clients, also. And finally, let's take a look at the market it's operating. Then we can take a look at its future, and finally, balance sheet. Finally, balance sheet. So the market. Uh, Here, let's just take a look at this. Now, this is the projections. So, from 2026, what? Oh, this is the growth. This is the growth, actually. Oh, this is the growth. All right. Whoa. What are these numbers? 2026 is lower than 2024. Um, Sorry, by 2025. Okay. I guess I don't understand this. Are these figures supposed to be inverted? All right. Um, I don't think I can. Okay, I guess I can't really look at the market now. Uh, Key players fueling this trend. Okay, let's just take a look at the balance sheet. And that's the best thing to do. Yeah, let's take a look at the balance sheet. The company did mention they are like debt free. The company is completely debt free, practically debt free. So here we have the total balance sheet. And let's take a look at two key figures. One is current liabilities. right? Just below me, we have this current liability section. Now, what are current liabilities? Current liabilities are essentially the money that business has to pay back to others in 1 year, right? This is the short term funds they have to pay back the loans and all. So they have not given a total figure. Now, this total is for all the liabilities. So, current plus non current liabilities. So, current liabilities or the short term liabilities, what are these figures in? These numbers are in lakhs. Ooh, these numbers are in lakhs. Okay. So, when we plus all these numbers, we have roughly around 1900 lakhs, which is 19 crores for the short term liabilities, I suppose. So, 19 crores or 1900 lakhs. We plus all of these, right? We plus short term borrowings plus trade payables, right? Other current liabilities, and finally short term provisions. We plus all of them. I think 19 crores is the figure. Then in the asset section, yeah, in the asset section, current assets, these are the assets which can be converted into cash within 1 year. And why are we looking at these things is if a company defaults on its short term debt, that's of course bad. That's bad. And current assets are essentially one of the biggest ways they can pay back their recent debt. All right. So current assets being more than current liabilities is a good thing. And current assets on current liabilities, that ratio is known as current ratio. And higher the ratio, the better. So if we take a look at current assets, we plus inventories, plus trade receivables, plus cash and other bank balances. Jesus, a lot of cash and other bank balances, short-term loans and advances, other current assets. If we plus all of these, it comes out to how much is this? 5,900, 600 something. Okay, 6,000 lakhs, 60 crores. Okay, 6,000 lakhs compared to 1,900 lakhs for current liabilities. So current assets, 60 something crore to 19 something crores. So way more than current liabilities. Current assets, 60 something crores, way more than current liabilities. That's the only thing to see. A lot of trade receivables and massive amount of cash and other balances. So I think that was the entire thing. That was all we had to see. Future, yes. We didn't look at the future. We can take a look at the future. All right. All right. Now, Safe 2.0. Okay, Safe Enterprises, we have Safe 2.0, an enabler of immersive, data driven retail experiences to modern India. Nice, nice, nice. Capex. Okay. Ooh, they're expanding their asset base. So capacity expansion. Okay, the plant area, the total plant area is expanding from 1.75 lakh square feet to 4.4 lakh square feet, more than double the increase. And if they can keep up their like of utilization, as you saw, was increasing to 90%, if it works out, this can be a massive increase in revenue. Only if it works out, right? But if it works out, this could be a massive, massive increase in revenue for them. Experience and experience centers. What is an experience center? Okay, whatever it is, experience centers. Maybe you can experience their products there. 6 to 10, six experience centers to 10. Then design intellectual expansion. Okay, defensive mode creation. Wow, they have 15. Wait, they have 15 design patents. Important info at the end of the segment. 15 design patents. Okay, to 31. They're trying to expand this to 31 and they're calling it a moat. Moat. Certifications, a ULCEN SGS. Okay, 15 patents expanding their capacity from like double, more than double. Experience centers, almost double, 6 to 10, not double, my fault. So this was the company. They seem to be rapidly expanding, a good revenue growth, massive fat margins. Were like what was it? 13, 26, 39, 52. Like some 37% for the EBITDA margins, 28% for the profit after tax margins. I think they are actually paying taxes. Big thing. Vedanta double wait, Vedanta does, not Vedanta. Adani Power doesn't pay taxes. No, they rarely pay taxes, but this company pays taxes. 15 patents, very impressive 15 design patents. Uh, their products can be used in a variety of things, variety of different store categories from electronics. We already saw beauty and cosmetics. What else were there? Fashion, and they're increasing their capacity utilization, so they're using their assets way more. And the current ratio, current assets are way more than current liabilities. Then what else? And lastly, the company just designs and manufactures the interior of a retail store. So that was it. That was shop fixtures. The company also had like very rapidly expanding cash flow from operations. That was like kind of, what can I say, real. That was unique to see. Their company expanding so much, so new. It seems like a new company, pretty small in revenue and all. 138 crores in revenue. It still has like positive cash flows, and cash flow is such an important metric. So maybe again, this is not investment advice. We can keep an eye on this company, and when more reports come out, right, more information comes out, we will look at this company, look more through its financials, its promoters, and all its future plans. If they ever hold like con calls, they have transcript for these con calls. And if you're wondering where you can get them, you can just go to screener.com. You can type in to screener.com. This is very convenient website. All right. And in screener.com, right, you can type in, you can search for the company. All right, you can search for the company, and in the document section, all right, here you can see documents written. You can click on the documents, right? So here we have like con call section. You see this PPT presentation. This is what I'm reading all along. These are the all the pages came from, all the info we just saw. It came from this section. They have no annual reports on Screener. Again, new company. So let's see how this company does in the future. That was it. Safe Retail Mixtures Limited. Price to earnings ratio of 24.